What's up, everybody? It's your favorite mentor, your one and only Forex hero. I go by the name of Ofentse, Ledwaba, and today I'll be showing you guys a strategy that you can utilize in order to trade your $20 and turn it into $2,000. Trade your $10 and turn it into $1,000. So basically, this strategy will be able to assist you in getting the most profitable trades and making sure that you get the right entries and you can be able to capitalize on it. So grab your pen and paper. Let's go into the charts. Okay, welcome to the charts, everyone. I hope you have your pen and paper, and also please do not forget to click the like, subscribe and share button, also the notification bell, so that you get notified every time we drop something massive. So today I'm looking at the daily time frame. I want to show you guys the most significant thing that you can do for yourself is follow the trend. Always follow where the market is going. You can never create the direction. Never ever think that you can create the direction as a retail trader. Follow the market. As I can see here, we've been having an uptrend. You can see this move here is looking at the point. It is a sign that the market has a potential to go down, but it does not say the market will go down, because in some instances you can have a move break and then continue further. You can have this type of move. So never say the market must go down, but our highest probability says in most cases the market tends to push down when it reaches this type of analysis or this type of pattern, which is we are looking at what we have. This 1, 2, this one is 3. You can see this is the 4th one. So you can also take this one as a double top if you are taking these 2 out. You can take this one as a double top. So we have a chance of pushing to the downside, but the market has to prove to us that it is indeed going to the downside. Go to 4-hour time frame. We can see that we've been capitalizing on the upward movement as we were using the impulse correction impulse strategy. So now we are looking at the market, seeing where it is currently going. We need to follow the market. So in most cases, you have to be aware that one other advice that I can give is that whenever you're taking a trade at this certain scenario, don't go full margin. Rather, go with a test entry. If it's possible, you can even use that trade on a demo, and then once you can see that it is confirmed, you go to the live. Because one thing that is happening here, the market is trying to catch people, because I see this happening, a move, something like this. You see? Because why? Do you see what happened here? Look what happened here. I want to show you something. What happened here? We pushed here to the upside, catching people here. You understand? Taking out all the people that will think that the market won't come back. And also, look, some people thought, okay, the market has closed above. Let me just do this. The market has closed above. What are we gonna do? We're gonna continue buying. But look what happened. So always be careful. Wait for the market, because I see a potential mass psychology happening here. So your entries are very much significant and very much important, because your entries is the one that makes your stop loss smaller or bigger. And also, taking your trades on 15 minutes will also assist you in getting those high probability snipers. But always remember that you can also get fake out as well. You see what is happening. I want to show you just how you can get fake outs with this one. You see now I'm on 15 minutes. Let me remove this. You see, someone might say you might have something like this. You might have a break, and then the market decide to push. You see, so you might have something like this. So you always be careful when you're trading on 15 minutes. I want to show, yes, indeed, it gives you snap entries, but at this level, you can see we are at the top. Yes, indeed, we can never buy. We can only buy when it's above this. Then this becomes what? Your support. This becomes your support on top. And then below it, it's what? The resistance. The resistance. So we can look for buys at the top and then below, as long as it's still below. Let me do this. As long as it's still below this, the only setups that are high probability are sells. So even here, what do we have to do? We have to wait for a retest. A retest will give an indication that the market is ready to push down. And also a retest to the downside will prove to us that the market is ready to do what? Push to the upside. So let me show you a certain scenario of what happened. Yes, look. It happens most of the time. Look, you bought here, and then you didn't trade stop as the market pushes out. Then what do? They come back, take out your stop loss. You see? So what you could have done here, you move with the market as it moves, and then you hit your stop loss, and then you know that, okay, fine, they hit my stop loss. What am I gonna do? I'm gonna take another entry. And then we can have something like this. Then when we take this entry, we can see what did it do? It pushed heavily. So what you can do, you can make use of your buy stops. That will help you not to hold it down, because the minute the market decides to impulse up, you are in that trade once there. Learn to make use of your buy stops. That is the secret in making much more money in Forex. Learn to use the buy stops, the sell stops. The pending orders are the most important one. So orders. Let's do down. Okay, so the pending orders are very much helpful and also assist you to be in the trade when it moves. Look, so you're not gonna be in a trade until it decides to move. Look, and obviously at the break, look, when the market decides to push, it pushes. Okay, so pending orders will assist you in getting the impulse moves, because if the trade decides, like for instance, if the trade decides that let's say you have your pending order here, it's yellow line here, you have your pending order here, and then the market decides to do something like this. So you see, you won't be in that trade. And what will you do? You will extend this, and then now your pending order will be here, meaning when it breaks. So now you can see you are not holding a drawdown up to this level. So now your orders will be here. So as the market moves, you keep on moving with it. Maybe I should explain it a little bit better. Okay, if you're having something like this, Then you're having your pending order here, your pending order here, and then stop loss here. Pending order simply be activated when the market. Then you have a situation whereby the market decides to do this. It doesn't hit your pending order, then it decides to push further. Then it only breaks here. Then you have an advantage of taking this and then putting your pending order here. So can you see the difference that you would have entered here or here with the loss up to here, and sometimes hit your stop loss, it will hit your stop loss because your stop loss would have been where stop loss would have been here. Stop loss would have been here. So now where do you have your stop loss? Your stop loss is here. So do you see the power of pending orders? It will definitely assist you. Thank you for tuning in. It's your favorite mentor, your one and only Forex Hero. Catch me in the next video. Peace.